Hey, g'day everyone. It's August 14, 2019. It's about 6 o'clock Sydney time. So the US market had a good night last night on news that Trump's delayed tariffs till December. So the Chinese tariff-related US stocks, Apple, Nike, those sorts of stocks, had a really good night day in trading. The Aussie market today wasn't really as strong. We had an up day, but it was just a small kind of insignificant day. And so it's earnings season in Australia. We have a lot of stocks gapping up and down on earnings, and that's what the market's kind of focusing on right now. JB Hi-Fi had a good gap up on earnings. ResMed had a good gap up on earnings. CSL today had a good gap up on earnings. What I'm going to do today is go through just probably one of the best trading signals, which I've touched on a bunch of times so far, but in terms of just looking for gaps and looking for stocks that gap on surprise earnings usually, and earnings is usually the best catalyst. However, it can be other things, a massive company restructure, something like Disney announced earlier this year that they were taking on Netflix in a online subscription service, and that produced this gap up. And so I'm just going to go through that. I really think they provide the best objective signals out there, and I think if a trader really just concentrated on gaps, so you can do gap up and gap down trades, but not just gap ups. But if that was all you did, you could probably do incredibly well just doing that. And it's probably one of the main things I concentrate on in terms of even day trade setups, as well as medium to short-term trades, and even long-term setups for massive gap ups. And so I'm just going to run through that. So what I've touched on, I've gone through it over a bunch of other weeks, but back on week one I talked about AGYS back here, how we had two massive big days up on volume, and then consolidated sideways for 6 days, and then broke out and went for a run. And so this is a kind of a perfect little example where we have what I look for. We want to see this desperation to get into these stocks. Well, when some big money is getting put into it, it's not retail traders piling in; it's big institutional money, and that's what I want to be following. And so if we just thought, I'm just going to run through some examples, and I'll run through some current setups, and then Disney talked about gapped up back here, and this provides a restructure to the company. And there's to me, I think this provides a lot of trading opportunities. So big gap up and massive volume, and then the next day we had a little bit of follow through, which I'll go into other weeks, but is a decent day trade setup on the second day play, breaking the high of that first day. Okay, and using an intraday chart obviously to manage that. But then we had a consolidation for 4 days and then a breakout, and this is just a classic setup: breakout, consolidate, breakout again. Okay, and this thing's still trending up. I'm still long this. I've traded a bunch of times. I still have a core position, and I'm using my longer term moving averages for my core position. I've been long it back inside this space. I actually own Foxtel as well, and Fox broke out from this huge ascending triangle ages ago. I'm getting sidetracked here. And here, broke out from this huge ascending triangle back here. I didn't actually know it was getting taken over. It gapped, and then I figured out that, it had, Disney bought most of Foxtel, and then my shares got converted to Disney shares, and I own Disney. And anyway, I got sidetracked. So getting back to the gaps, and so now let's just move on to other examples on NAB on the Aussie market. Gapped up, so gapped up here. I think this is election stuff, blah blah blah, negative gear and franking and all that sort of stuff, mainly the franking stuff. And so this gap up is massively significant. I mean, huge volume, right, on the gap up, held the gap up. This is an island reversal here too, which is just such a fabulous signal, but in its own right. But then it holds this gap up and then breaks up. And this is just breaking of this candle here. It's just a great signal for a short-term trade or a medium-term trade. But this island reversal and the big gap up, it stands to reason that it's a great signal for for that stock for the short to medium term, and maybe even the long term. If once you're ahead, you can try and let the trend play out and see how far it can go. And so another stock I've talked about on and off, NPL, Medibank. big gap up, held the gap, broke out. All right, the pattern just repeats, and most people are so scared of these gap ups. They think, oh, it's gone too high. I don't want to be a sucker buying something after it's raced up. It's gapping up for a reason. All right, it's not. If it gaps up on tiny volume, be suspicious. But this gaps up on massive volume. It's happening for a good reason. The smart money's piling in, and you just got to follow that smart money, and that's the whole point of this theory. If you look at one of the most successful, best stocks ever, Amazon, the number of gap up this thing. So you go back and study this chart if you're really serious about the biz. But you go back and study this chart and just look at how many gaps this thing's had. Massive gap up, right? Held it, raced up. Okay, and then. They're all over the place on this chart. I'm not going to go through, but I probably need to go back heaps further. But but breakaway gaps on Amazon. Here's obviously the main one, but if we go back further, we're going to find a bunch more. But gap ups on leading stocks, just a great signal, especially when they happen with earnings. Like this one was definitely earnings because I can remember that. Anyway, so now let's move on to another one. So just to show that it's not always happening on expensive leading stocks. MDC is a little Aussie med stock that this day here on the 4th of July. An earnings report came out, and so they announced 135% increase in revenue growth, which is nuts. You're turning over 135%, more quarter on quarter. It's just cool. It's a really good growth. And so we had a big volume day here. For this stock anyway, it's still it's pretty low traded stock, and then it held that, formed a little Davis box. It came up in a Davis scan, this thing, and then it broke out of that, and it's been had a bit of a zoom up. And so I like to even though obviously I'm a technical trader, when you're trading these gaps, you're really a fundamental trader too, because you're really trading in catalysts. You're looking at. You're waiting for catalysts to come out, you're waiting for big earnings, big surprise announcements, massive volume, you're looking for smart money to pile in, and then you've just been patient and waiting for it to consolidate, and then you're buying the breakout. So you can call yourself a technical trader, but you're not really a tech fundamental trader, and you're really combining the two. And when I see a gap up like this on massive volume, I go to the ASX website, I go through the report, I have a look at what's happening, what happened in the report. Why did it gap up? Did it gap up due to some takeover rumor, which I don't want a part of? Or did it gap up due to earnings and real business stuff? Something the company actually making money for once. And then I'll get interested, and so especially when I see huge volume. And so that's just another example. I'm going to rattle through a few more. ResMed, gapped up on earnings. I've talked about that one a fair bit. Garmin, this is another example of, this is a shorter term trade, but here we had this massive gap up and huge volume and closed near its high, and then we consolidated in the Davis box and broke out. And this was a short term trade. I was in and out of this, but obviously it's down again now and blah blah blah. But this isn't the best obviously example. If you were in this for a long term, you would have probably lost. But short to medium term or tight stop losses, you would have won on this. And it just provides such clear setups because it's just black and white. Gap up, big volume, consolidate, break up. Okay. Another one that loves to gap up, Rocco. Gap up here, massive volume, held it, broke out. Okay, gap up here, massive volume, held it, broke out. Gap up here really hasn't given us a chance, but for day traders and the second day play, it did, gap up, held that, the next day opens below the high, consolidates, and you flip your intraday chart, and then you can buy the breakout of this high. And so, these gap up plays you provide with day trading opportunities, swing trading, short term, medium term, anything you want. All right. So stocks I'm looking at the moment that have gapped up. Obviously, we've talked about JB Hi-Fi. So now I'm looking for a consolidation in this thing. It's gapped up. The volume is okay, not great, but and then I'm looking for 6 days sideways consolidation on small volume. If I can do that, then I'll consider buying the breakout. CSL, I'm looking for this to consolidate 6 days sideways, then I'll consider the breakout. Now, I've done a data scan on NASDAQ data just because I'm trading the NASDAQ a lot more than the ASX at the moment, just because it's just providing more signals. The ASX isn't really providing too many signals at the moment, so I just kind of go where the money is. And so MEDP, okay, its current setup, massive gap up, huge earnings announcement on this 30th of July, massive earnings surprise, and it's formed a Davis box. And so the Davis box scanner finds these setups time and time again. I love it. This breakout here, I saw this happening, but this happened like a couple of days before, the day before earnings. I didn't get that, but anyway, sorry, excuse me, guys. Sorry about that. So I'm looking for this breakout here. It's post earnings. We've had a consolidation on low volume, and I can look back on this next week or the week after and show everyone how it went. But that's one setup that I'm scalping and stalking. And then the next one is, sorry, let me just find it. It's IFV, massive gap up on nice volume here due to earnings. It's held. It's now formed a Davis box and a breakout here. I like the expensive stocks in the US, the $1 and $2 things. They're just useless, crappy companies that aren't doing anything. They're not making any money. There's no earnings. They're usually biotech, things, and it's the spec stocks in Aussie work differently. All these, our mining companies, they tend to have nice runs, but in America, I just concentrate on the expensive stocks. I want the expensive merchandise, the high quality stuff. It's like property. The best stuff's usually expensive, and that's what happens with the stocks in the States. Okay, all right. So that's really just what I wanted to run through this week, just to really go through gaps and why I think they're so good when they happen with earnings and huge volume, and why they're so good for day traders as well as short to medium term traders and even long term investors. Okay, cool guys, all the best, and sorry I've been a bit sick this week, so probably sorry if I've sounded that way. I'll be back next week. Catch ya.